Good morning. Welcome to the video conference of MDS Branco with reference to the results of the second quarter of 2025. We have with us today Gustavo Lopes Teodosio, Vice President of Investments and Controllership, and Fabio Cefali, Director of New Business and Investor Relations. We inform that this event will be recorded and that during the presentation of the company, all participants will be only hearing the teleconference. Afterwards, we will begin the question and answer session only for analysts and investors. The translation is available clicking on the button Interpretation. For those listening to the conference in English, the original audio in Portuguese can be silenced clicking on Mute Original Audio in the lower part of the screen. The transmission is also being done simultaneously on YouTube and the address www.youtube.com.ri.mds. We'd like to also mention that eventual declarations which may be made during this teleconference relative to business perspectives of MDS Branco, projections and operational goal and financial goals are beliefs and premises of the directors of the company, as well as information currently available. They involve risks and uncertainties and premises as they refer to future events which depend on circumstances which may or may not happen. Investors should understand that economic conditions of the industry and other operational factors can affect the future performance of MDS Branco and lead to results which differ materially from those considerations mentioned here. We'd like to pass it over to Sr. Gustavo, who will begin the presentation. Gustavo, please go ahead. Good morning. Welcome to our teleconference of results for this second semester. Before we start in the numbers, I'd like to initiate expressing my thankfulness to the entire MDS Branco team for the excellent performance which we have seen in this quarter, a direct result of the dedication and the work and the passion of each one of our collaborators, each one of our employees. We have the pleasure to announce that thanks to these forces, MDS Branco had a quarterly with very solid results, showing the resilience of our business and the efficacy of our strategy. Even though the challenging scenario, the company has had a financial support performance, which was in relation to creation of value, efficiency, operational efficiency, and the consistent evolution that we have been commenting to you all in our calls of results, earnings calls. I'm going to pass it over to Cefali, who's going to start off by pointing out some of the points which highlighted this performance in the period. First of all, our net profit reached 216 million, which represents an increase of 14% in relation to the previous year, and surpassing significantly the expectation of the market, pressured greatly by the efficient financial management and EBITDA of 340, an increasement of 2.4% year-on-year, demonstrating a control of expenses and general expenses of sales and administrative expenses, representing 28% of our revenue. When we compare it to last year, this group of SG&A represented almost 24%. And we talked a lot about the initiatives for optimization, increase of productivity, and many actions which we have taken of cost controls. We expected an absolute number year-on-year. We not only neutralized the inflationary impact, however, beyond that, we made real savings year-on-year over and above inflation. This represents a operational free cash flow of 416 million, almost doubling in relation to the same period of last year. Growth of 97%. Beyond the discipline, lots of discipline in SG&A and working capital. We are closing the closing the free cash flow of 228 million, maintaining our AAA rating in Fitch, and our solid capital structure, and with a very low level of leverage. We're looking at future opportunities for growth. These results are reaffirming our strategy we implementing for quite a while, focusing on strengthening our commercial capacities in this area as compared to last year. Just looking at these, trying to earn these results, see these results, and continuing the search for sustainable growth with attractive margins for the coming quarters. I want to thank again all of your presence and pass it over to Cefali, and afterwards we'll come back for your questions. Fabio, please go ahead. Thank you all very much for the introduction. Good morning to everyone who are accompanying us in our second quarter call. Before entering the numbers, I'd like to just mention that this image, which is on the screen, is a photo which was taken at the sales convention of M. Dias at the beginning of this year, which united all of the areas of the company, the sales team, the industrial manufacturing, logistics, finances, HR, sustainability, marketing, absolutely the entire team, and shows that everybody is going after the same results, which is to help M. Dias to grow in profitability with a return on investment and a spirit of overcoming and a spirit of reaching goals. It's with this spirit that we have entered 2025, and we have started to feel an evolution, which is a very positive evolution of the results. Following along with the presentation, I'm going to go over the numbers which were mentioned by Gustavo, and I'm going to start with the presentation. The first subject which I wanted to share with everyone, is the execution and construction of the future, which is what we have already been announcing in our recent calls. The results which were seen in the second quarter are results which did not happen by chance. We have defined a plan and executed this plan, and we are executing this plan. And the plan was established based on several priorities. Number one priority, which is the clear commercial plan of growth in profitability, evolve and accelerate our commercial capacities, the continuous revolution of the structure of costs and expenses of M. Dias, which we've seen very evident in this second quarter, the search to increase productivity, manufacturing capacity for distribution, because here we have something that's very important, which is the growth of our volume, which helps us to dilute our fixed costs and improve our margins of return, and the continuous development of a agile culture. The entire plan was defined and designed and is being executed based on these priorities. On the right-hand side here of the screen, you see some of these actions, which we maintain a continuous focus on sellout with a bigger presence at this point of sale, which is an important part of our plan, which is looking at the quarter. This involves all of the areas of the company, especially those which are at the head of the commercial area, the evolution in the route to the market, which is the way that we get to our clients, and also the management of our distributors, which is a channel which M. Dias has started to invest more in the recent years. The acceleration of programs of productivity and strengthening of the matrix management of expenses, which is something that's been gaining relevance and importance in the company, and the improvement of the indicators of service, looking principally at our clients' satisfaction and the metrics of satisfaction of our clients. So the results were not by chance. There was a plan that was designed and which is being executed, and the entire team is filled with the same spirit. The team that sells is the team that helps to sell, and this is the spirit that with which we started 2025. Looking at a few other examples, in the food service category, which is a channel for distribution, where we started to speak more about in recent quarters, which unites principally the categories of wheat, flour, and fats, oils and fats. We had some important events in the recent months. We launched the boulanger flour, which is a high value added for pizzas, pizzerias, and restaurants, which needs a fresh special product. The medalla d'oro flour for frozen bread and specialty houses. It's a line of special fine flour and a new a digital platform to give a little bit more fluidity to our relationships with our client who need this type of product. Coming back here, this image here on the right-hand side illustrates well one of the initiatives that we are doing, which is the program Open Doors, where we invite our clients from various regions of Brazil to come and meet our industrial units, our manufacturing units. Here's our factory production plant of oil, vegetable oil, something that we're doing also in the mills in the northeast and in the south of Brazil as well. In the first half of this year, we did a day which was called Point of Sale Day, with the spirit that we are all salespeople. In this day, PDV is our point of sales. This was united all of our employees from different parts of the company, more than 370 people who were in more than 130 stores in 40 cities in 20 different states. So it's an operation, an action which gave an experience and closeness with the clients and consumers, not just from the sales team, which is really in this function every day, but also some of our teams who are in the back office of the company. We're also in May, during the month of May, APAS, which happens every year. M. Dias won an award. We were recognized there in the category of mega stands, very important for our relationship with our clients. Our stand was voted the best in terms of the concept, promotional activities, visual merchandising, sustainable stand, and we were in the third place in terms of visual communication. So here's our thanks and our recognition to the entire team who worked very, very hard in the design of that stand and the building of that stand and the execution of these days when we're at the APAS. Here, a look from the medium to long term, the results of the investments in marketing, which have been done over recent years. Of the 50 brands most consumed in Brazilian homes in 2024, this is a research which is done by Canta. 3 brands are M. Dias Branco brands, Vitarella, Piraquê, and Richester. And these brands gained relevance from 23 to 2024. Vitarella is now in the 10th position, went up 1 position. Piraquê 27th, up 1 of 6 positions, one of the brands which has received the most investments in marketing. And Richester is in the 40th position, moved up 5 positions. So M. Dias is very focused on volume and growing revenue, and at the same time at the construction of its brands. An important parenthesis here is the brand Vitarella brand, which is the first in terms of relevance in the homes in the categories of biscuits and cookies, crackers and cookies. We made investments here in marketing and trade. Just to give you 4 examples of things which have already happened. The investment which was made in the São João festivals, which are in the Vitarella and Fortaleza brands in Ceará and Pernambuco State. All the promotional material from the point of sale. This is a very important for the turnover in the stores. The activation of the lemon, the unfried lemon, and new product. One of the principal launches of 2024, in which we've invested a great deal, and also a question of sampling, especially with the Piraquê brand. Just an example in a stand here in São Paulo with the malted cookies and malted products and cookies. In terms of launches, we have 2 new flavors in the personal crackers in the Piraquê brand. These Presuntinho and Queijinho crackers in new packages, in multi-packs, which have 12 small packages inside of each package. Looking at the numbers on the market and net revenue, these number here it's important to mention that these are not MGS's numbers. These are numbers of the markets that we're talking about, the cookies and pan pasta market. We're looking at the top line of the two tables here, both in the comparison and year on year, as well as in the comparison quarter against quarter. The cookies and pastas markets presented growth in value, which is the actual amount in reais in those markets. The cookie market had a small fall off in volume compared to year on year. We believe that this has something to do with the increase of 8%, which the industry had between the second quarter of 23 and 24 and 25, which impacted in 2% in the number of units sold. When we look at the information for a short term, from the first quarter to the second quarter of this year, of 25, the cookie market has grown in value, volume, and in units sold, and an average price went up 2%. The pasta market grew in value in both comparisons. It was stable in volume year on year and grew by 9% quarter on quarter in comparison with the first quarter, and also 9% in units sold, and wound up with a stable price compared to the beginning of this year. These are MGS's Branco's numbers. We see, starting on the left-hand side, we saw net revenue versus the second quarter of 24 grew by 4%. 1T of 20, the first quarter of 25, it grew by 23%, double-digit growth. In terms of volume, compared to last year, there was a retraction of 10%, and compared to the first quarter, a increase of 16%. It's important to explain that this retraction in volume of 10% is basically two factors, an internal and an external factor. The external factor is that the question of the cookie market, which grew 3% in volume compared to the second quarter of 24, and an internal question, which is important, which is that in the first quarter of 24, we did a changeover in our systems in MGS, implementing SaaS, and so we needed that first quarter to make this change. And part of the reposition of stocks, of inventories wound up happening during the second quarter. So this creates a comparison of 2T of the second quarter of 23 to the second quarter of 24, 25. It makes it difficult. When we compare to second quarter of 25, there was growth in volume. When we compare this month, the average price grew in both comparisons, 15% compared to last year, and 6% when compared to the first quarter of 25. This growth compared to the first quarter of 25 has two factors. One is adding the readjustments and increases that were done in the first quarter, and also a favorable mix factor in that period. When we look at this following slide, we see the evolution of net revenue per group of categories, which is a model that we have used since the third quarter of 2024. Principal products, which talks about cookies, pastas, and margarines. And we're talking about the wheat mills, the refined oils, and the adjacency, which are cakes, mixtures, mixes, sauces, and spices. We saw growth in every vision. The three groups grew in the comparison with last year, 3%, and more than 11% here in the adjacent products, which are categories with a potential for higher growth. And in the comparison with the first quarter, there was a double-digit growth in the principal products. This is explained part of the mix effect, which was favorable between the first and second quarter, and the mixes and refining of oil,
which had growth of 9%, and the adjacencies, which grew by 29% in this comparison of the first quarter to the second quarter. Looking at the area of costs and expenses, I'm going to talk here with the three principal lines which impact our variable costs, which is the exchange rates, the price of wheat in dollars, and the price of palm oil in dollars. When we look at the second quarter of 24 to the second quarter of 25, remembering that these are market numbers, these are not MDS numbers, these are market numbers. There was an unfavorable effect of exchange rates from 5.2 and 5.3 to 5.7 in comparing these periods. Wheat has been stable, while palm oil had an increase, a relevant increase from $1,080 per ton last year to closer to $1,200 per ton this year. So this is a comparison, a dynamic which is unfavorable in costs year on year. When we look at the short term for the first quarter to the second quarter, we already saw there was an appreciation of the real. Here, wheat in dollars, it was stable, and palm oil has started to show a slight reduction from the first to the second quarter. When we look at these variable costs reflected in our variable costs, this is the information that we have. The variable cost per kilo in the second quarter of 24 was 2.7 reais. It increased over the year, during the year, and due to the devaluation of the real and the increase of palm oil in dollars, and it got to 3.2 in the second quarter of 2025. Our fixed costs in reais went from 0.9 to 1.1 and remained stable at this level through the second quarter. The average price, which are the factors which impact our gross margin, the average price was 5.2, went down here a bit from the second to the fourth, and then it is now 6 reais per kilo in the second quarter due to two factors: the pass-throughs of prices in the first quarter and the positive mix effect with the recovery of growth in the category of cookies. In essence, we started the second quarter with a gross margin of 33.4%. In terms of expenses, recovering the comment that Gustavo made in the introduction to our call, SG&A, which is our expenses with sales and administrative expenses as a percentage of net revenue, we closed this quarter with 20.8%, below the first quarter of 25 and lower than the second quarter of 2024. So it was an improvement in relative terms when we compared it to net revenue, and also an improvement in nominal terms. We went from 621 million in expenses in the second quarter of last year to 565 million in the second quarter of this year. Opening also expenses with sales and administrative expenses, there was a reduction in both expenses areas, with sales, which went from 531 to 477, and administrative expenses from 90 million to 88 million during this quarter. Putting together what happened in revenue and gross margins and our expenses, we see a very strong growth of EBITDA from the first to the second quarter of 2025, from 161 to 345 million reais versus the 337 of last year. So our EBITDA grew both in the quarterly comparison as well as the year-on-year comparison, and we closed the period with 12.7% EBITDA margin. Net revenue represented the same tendency, strong growth compared to the first quarter of this year, and growth compared to the second quarter of last year, with a margin expansion, which was 7.9%. Looking now at the generation of cash generation and investments and debts. In the quarter, we generated 416 million in operating cash, 696 million in the first quarter, in the first half. So there was growth in both comparisons. And going back to the quarter, the generation of cash comes from the improvement in results, 345 million in EBITDA, and the free up of 83 million in working capital. Understanding our working capital situation, suppliers, we had a reduction of 2 days compared to the first quarter. Clients of 1 day in inventories went from 100 days to 25, went down by 25 days. So a large part of that increase in working capital came from the inventories. Looking at our leverage and our position of cash position on our balance sheet, we closed the quarter with a net cash on hand, more cash than debt, of 328 million reais, with a leverage of minus 1%, which means that we have more cash than debt, and maintaining the AAA Fitch rating for the seventh consecutive year, which is the highest rating available from Fitch. More than 67.9% of our debt is long-term debt, with highlights for the payments starting in 2028, which are basically the CRA, the CRA, which was issued in 2021. The investments, looking at our quarterly, for the first half, which are long-term investments with impact for the long term, grew by 25%, totaling 142 million reais, including in this first quarter. Last year, of the 113 million, 30 million was still related to investments that were necessary for the changeover of systems and the implementation of SAP. On the two images on the side, two examples of these investments focused on efficiency, productive efficiency and operational efficiency, and energy efficiency, digitalization of our factories. So we maintain an agenda which is very strong and robust of investments in our operation, both in systems as well as in the distribution questions and distribution and production. The subject, which is a subject which we like to open up with you today, are the investments in artificial intelligence, which here bringing two examples. And at the end of my speech, I'm going to pass a very short video clip to illustrate what's being done. However, the investments in industry with our manufacturing, with the focus on maintenance, predictive maintenance and prescriptive maintenance, which happens with recommendations based on insights and artificial intelligence, which helps us to reduce the amount of corrective maintenance and emergency maintenance, investments which are being done in various processes, back office processes. In that same spirit, we have the team that sells and the team that helps sell. The finance team today offers to the sales team a series of reports, which previously would take us 2 weeks to generate. These reports today are generated automatically and in the analyses, and we do this in less than 24 hours. Something that was offered to 30 people is now offered to more than 300 people. These are personalized reports which are available in less than 24 hours for 300 people. Remembering our strategy, the growth of our current business in all of Brazil. Today, we just have one commercial director and heading up this entire business. The other categories, which are adjacencies, which of our growth in our international operations from acacias and export products. Looking at ESG, positive highlight for the indicator of women in leadership, which gained 4.4 percentage points in the comparison quarter on quarter, also half on the half. And these indicators on the left show a small fall off. However, this is related directly to the volume of production. So I'm going to close here this part of our presentation, and afterwards we'll go over to the Q&A. I'm going to ask for the MZ team to put that video, which is going to show one of the initiatives that we have.
A transformação digital é fundamental para empresas que buscam agilidade, decisões precisas e vantagem competitiva. Com investimentos em automação e inteligência de dados, aceleramos decisões e fortalecemos nossa posição no mercado. Agora, queremos apresentar nosso case de uso de inteligência artificial aplicado à gestão da margem de contribuição, solução que foi desenvolvida com o apoio de grandes parceiros. Manu, nossa assistente virtual, agora é capaz de avaliar e analisar dados de margem de contribuição, personalizando relatórios para mais de 300 pessoas. Relatórios em textos, gráficos, áudio e vídeo. Antes, com uma equipe restrita e muitos clientes internos para atender, havia uma dificuldade em gerar insights granulares e em tempo hábil para decisão eficaz. Agora, com a Manu e a inteligência artificial, as análises foram automatizadas, rápidas e personalizadas em diferentes níveis como região, canais de distribuição, marcas, família de produtos, entre outros. Com isso, a M. Dias Branco garante que seus colaboradores recebam as informações certas no momento certo. Sem contar que o acesso aos dados foi ampliado de 30 para 300 pessoas e o tempo de análise foi reduzido de 2 semanas para 24 horas. Agora, com a Manu, os colaboradores têm acesso aos insights de forma ágil e objetiva. Essas informações já estão sendo entregues ao time comercial e são feitas totalmente com inteligência artificial. Confira como ficou a análise da margem de contribuição em uma das regionais.
Em janeiro de 2025, a Regional Bahia e Sergipe registrou uma margem de contribuição realizada de 23,5 milhões, superando a margem orçada de 21,3 milhões, resultando em uma variação positiva de 2,2 milhões.
Esta é uma representação de como fica o relatório gerado em PDF. Seguimos transformando o futuro com tecnologia.
We'll now begin the session of questions and answers for investors and analysts. If you would like to make a question, please touch the raise hand button. If your question has already been answered, you can leave the line clicking again on the same button. Our first question comes from Senora Renata Cabral from Citibank. Please go ahead. Hi. Thank you very much for the opportunity. Congratulations on the results. I have 2 questions here. First, the release mentions a readjustment in execution of investments with areas for greater possibilities of growth in principal products. If you could detail the regions and qualitatively the principal effects, positive effects that you see helping this result for the quarter. My second question is about the effective tax rate, which seems quite low. I had questions about the fiscal benefits. We also wanted to understand how much was a one-off for this quarter, or if it will eventually, if there may be carryovers for future quarters as well. Hi, Renata. Good morning. This is Fabio speaking. Thank you for your questions. I'm going to start off by talking about the effective rate, and then we'll look at the first question. First of all, the question of the context. We had an effective rate in this quarter close to 3%. We commented in recent quarters that due to the taxes on the investment subsidies, we should have an increase in the effective rate, partial increase close to 15% in an annual vision, perhaps having some volatility quarter on quarter, principally due to the effects, non-cash effects. And that's exactly what we saw in this quarter. There was a provision of expenses in the results with regard to the financial results with reference to some losses in swaps.
a non-cash effect, which could change in the future. The swaps of these debts in dollars, where we exchange dollars for CDI. So there was appreciation of the real in this period. And so we had this unfavorable impact on our cash, which winds up contributing to this rate, effective rate in the quarter, below 15%. However, perhaps in a more structural way, in the annual vision, the ideal would be to consider a rate closer to 15%. Let me also add here one comment, Fabio, in relation to the effective rate. Renata, thank you for your question. Beyond the effect that Fabio mentioned, we also launched in this quarter all the credits of depreciation after the new law which taxes these subsidies. Calculating over the quarters, we're seeking together with the governments the approval of the different assets which are in the courts. We were able to have a approved list by the government's asset by asset at the end of the quarter. So in this quarter now, you'll see a credit due to the depreciation, the taxation of fiscal incentives accumulated for the quarter and in the half, but released only in this quarter, in the third quarter. So it has this effect as well. It's Fabio again. So going back to your first question in relation to the expansion in the regions with the greatest potential for growth, we're talking basically about the Southeast. And I think it's important to point out that some questions that were done during recent months. The first, we have a united team which looks at Brazil as one thing, as one market from the standpoint of commercial for the principal business areas, which are cookies, crackers, and pastas and margarines. We have the synergies with the other areas of MDS from the angle of our clients, looking at it from the point of view of our clients. The second point is that the entire process of revenue management, which involves both the process of pricing as well as the management of commercial budgets, we have found a good equilibrium between the pricing, the growth in volumes, and margins. The investments in marketing, which have been done, both for the construction of our brands, as well as such as Piraquê, which is a very important brand in all of Brazil, but especially in the Southeast, as well as the investments in marketing and in trade marketing in the stores to give turnover for our products, and also to cite three examples. For example, we have in fact contributed to an improvement in our results of these regions which have the greatest potential for growth. Thank you, Fabio. Thank you, Gustavo. Our next question comes from Felipe from Scotiabank. This is Fabio from Dias. Felipe sent his question by email. I'm going to read his question, and later on we will respond. Felipe asked for us to comment about prices and the implementation in phases of the competition. The question is the following: the price readjustments, are they completely implemented, or do you think that you will need to make new increases? The sector has maintained discipline in this area? I can comment, Felipe. Very important your question. In principle, yes, we shouldn't have new price increases, especially if we have something that might be a one-time due to the scenario today. We look at wheat production. Global wheat production is doing well. The Americans have done well with 53 million tons. Europe doing well with their harvests. We have a provision of 20 to 22 million tons. Brazil had a slight reduction of area in Paraná, but in general, when we look at the global offering, we don't see for wheat any perspective for price increases. The exchange rate in Brazil has pulled back. Looking at the scenario, we don't see any perspective for big increases. MGS has gone to the market. We've gone out first. We reduced our price list before our competitors did, and all of the competitors have been accompanying our prices. We had several specifically in pastas, which had a slightly lower prices, and we lowered our prices in sequence. And in the month of July, when you compare the price of in mix, it hasn't changed. We can affirm that everybody wound up following MGS prices. So there's a disconnect. There's no disconnect in pricing. For the future, the thing that is extremely strategic is some a category which has gone less than it should, with some specific impact of some specific raw material. But the new table for these products in region is not what we're seeing for this year, unless the scenario changes completely. Our next question comes from Guilherme Palhares from Santander. Please go ahead. Good morning, Gustavo, Fabio. Thank you for taking this question. From our side, two questions. Gustavo, you mentioned about the wheat prices. And what about the tariff questions? If you see any risk where this might hit? The second point is hear from you the questions of the factories which have had recent deactivations of a recovery of certain lines. The question, your manufacturing question in terms of installed capacity, and when we're looking at levels of production, and to understand a little bit if you have a strategy for increasing volume and what can we expect going forward. Guilherme, thank you for your question. Good morning. With respect to the question of tariffs, we don't see anything from the standpoint of purchasing, any relevant risk between Argentina and Brazil. We have 80% of our wheat comes from these two countries and it comes from the US and Canada. So looking forward, looking at these trading companies, we don't see any risk from the side of raw materials, any relevant differences in raw materials. On the top line sales, we have an export area which has evolved greatly, especially in the US market, but it's still a big initial work. We're selling something like 60,000 tons per month. This represents 0.5% of the total sales. So it's also nothing relevant. It's a shame because it is part of that we have done a consistent job with. This number had been growing, and the initial impact is very big looking at export, but not looking at the whole thing as a company. It's nothing relevant. So it's a point of attention. Some solutions are already being studied. Some things that we're producing in Brazil and sending to the US, we will wind up producing in Uruguay, which will help a little bit, but it will have an effect in sales only in the US. As far as the deactivation of factories, remembering that we deactivated Rio from the area of pasta and a factory for cookies in the interior of São Paulo, in the city of Lençóis Paulistas. Rio de Janeiro continues the same way. The company is hibernating these factories, doing maintenance on the factories, but without production. And in the case of Lençóis, with the recovery of the commercial team and marketing and so forth, you remember that we did an important change last year. The team today is completely complete and involved and tied in several actions, especially at point of sale, and much more participation in the point of sales, a lot of focus is on sellout and execution. We see a recovery of volumes, principally in what touches on the area of cookies in the region, the Southeast region. This has caused us to reactivate the factory in Lençóis Paulista, which was also in hibernation. We mentioned that we would be deactivating it temporarily until the volumes grew enough to justify it. And so that's exactly what happened. We thought that this would be something for the third or fourth quarter, but I mentioned this in the previous call. But as the measures taken by the new team have already started to have effect at the end of the second quarter, and so these actions to deliver the results going forward. So this has caused us to reactivate that factory to not run any risk of having a shortage of products for the market, but very much concentrated on cookies. Thank you, Gustavo. Our next question comes from Pedro Fonseca of XP. Please go ahead. Good morning, Gustavo, Fabio. Thank you for taking our questions. First of all, I wanted to make a follow-up regarding prices. As Fabio mentioned, there's no expectation on the part of the company to have to change prices before the end of the year due to the cost scenario. But I wanted to hear from you, what have you seen from the competitive environment in this context of costs? Have you heard or have you seen if there's any competitor who might be inclined to lower prices or whatever in the next semester? That's the first question. And the second question is in relation to the selling. We've had an efficiency very interesting in the second quarter, and I wanted to hear from you a little bit more about, in relation to that, what should we expect going forward? If this is possibly the new run rate that we should expect from the company, or if you have a little bit more juice to squeeze out of these measures that have already been taken in according with the external things, and it would be great to hear from you more about that. I'm going to start here then Fabio can complement. As far as prices, the market has matured. We don't see anyone doing anything crazy as we've seen in the past. We had a scenario we had great variations in commodities or exchanges. This generates confusion because not everybody has a hedge or an inventory on hand, and sometimes it takes a while to implement these price changes. Many smaller companies don't have an area for revenue management, so it's more complicated when you have these huge macroeconomic type of changes. What we're seeing now with the market being more stable, this means that the market itself can be more stable. It's what's happening. Once again, what helps us to speak of this is the price index, which how we see things in the marketplace. We haven't seen any big variations in prices, which is the ideal. If there was an important relative difference relative from one day to the next, then that would be, which is what we used to see regularly. So I think on prices, in terms of prices, that's it. We've done a lot of homework regarding this. We have a higher level of efficiency, especially in the Southeast. You have less critical mass, less volume, and we have done an important job of efficiency in the operation of our distribution centers, the size of our fleet, and the evolution has been very relevant. In fact, our cost per ton, we have an economy of savings, excluding the volume of the purchase. The company has operated in a more efficient way. I don't see much opportunity for reduction in selling costs. The marketing is We've actually held on a little bit on that because the team was being filled, being trained. Now we have everybody on board, so we imagine that the campaigns, the marketing campaigns will begin in a more consistent way. So I would say as far as selling expenses, I see the cost of serving and more investments in the point of sale with marketing. But that's what we see looking forward. Overall, I don't see any big changes in the level of SG&A as a whole. Our mind is something between 18 and 20% of net revenue that will be our target. This is Fabio. Just to add two points in relation to this point, which Gustavo mentioned. When we look at the selling has logistics, marketing, commercial expenses. The cost of freight in the second quarter of 24 to the second quarter of 25 per kilo fell 3.8%. This is the direct result of all of the initiatives that we have underway for the reduction of this line, for the search for productivity, such as, for example, the delivery of products from factories directly to the stores without the need of certain items passing through our distribution centers. Another important point for us to mention here is the question of marketing. In recent years, we've made important launches, product launches, such as the unfried lemon from last year, and this year the decision was to slow down the number of launches and focus on what we already have in the portfolio. So this is demanding a little bit less in marketing investments, and part of that budget is being allocated in the trade area to create more turnover in our points of sale. Very clear. Thank you very much. Our next question comes from Isabella Simonata from Bank of America. Isabella, please go ahead. Good morning, Gustavo, Fabio. Thank you for the call. Two questions. First, focused on dynamic of revenue. It still calls our attention, the performance of volume, even when we look at the semester year on year and the comparison between 2023, the volumes are lower. So I wanted to understand that you're not going to need to raise prices, but removing what is up to the company to execute in terms of for the category overall, what do you see in the way of performance going forward? You mentioned the reopening of capacity, increasing capacity, but in our vision, it seems very pressured in certain categories, and without much chance for changes going forward. I want to see what you're looking at for the growth in volume of that category. And the second question, in relation to top line growth, I'm not sure if it's too clear what you've done with the implementation of prices in the last two calls, especially in the call from the fourth quarter. If I understood correctly, the message was that you were not going to lead the price increases in the category and try to do something a little bit more in line with the price increases of the peers. However, what's being said here is that this changed a little bit, that this time you led the price increases, the recent price increases. And when we compare your prices, your performance, of course, there is impact from the mix. When we look at the sellout of the category, it seems that you went a little bit beyond that. If you could remind us how you are thinking about the strategy of price increases that it might become necessary, so we can have this a little more clear. And finally, you also mentioned in your release to return to direct distribution from the factory to the retails using our own in-house fleet. I wanted to understand what's the magnitude of this within the strategy of distribution, and what can we think in terms of the impact of that change? Hi, Isabella. This is Gustavo. Thank you for your question. In terms of volume, the volume has been pressured not only in Brazil, but you look at the 11 consumption companies in the world, they've all had price increases, but the volume of the 11, 3 have had some type, very subtle growth in volume. The whole world is with these costs growing worldwide, have had to price this in, and the consumer has been feeling this for some time, these price increases. So that's what's happening with the market. When you look at the market here, not just MDs, but the cookie market overall, it grew by 8% in price and fell by 4% in volume. So the entire market, in terms of volume, is more challenging in Brazil as well as the rest of the world. In our case, it's been a challenge. Two things: to gain market share both in volume as well as in value. This is our preoccupation, our concern, in looking at this today and going forward. There are things that we cannot control. There are some categories where MGS has 60, 70%. Certain specific efforts to help the whole market to grow, because since we're part of that market, it's so good for us. In general, we have a more resistant market that is more resistant to higher price increases, which has challenged us once again to have a better performance than the market, to beat the market, because we lost some market share last year. So the methodology is a little bit different since our planning phase. We've done planning which is quarterly. We're negotiating this ahead of time for each retailer by category and by region. Naturally, it's impossible, practically impossible, to not push this market, because there are some regions where our participation is extremely relevant. We have to come out in front. What we're doing is taking more care to not position ourselves beyond the competitors. We fought a lot to pull this category along for a long time. We reached the conclusion that this is very expensive for us. It has a large cost attached. So what we're doing is the company is having more agility to correct price increases that were not accompanied by the rest of the market. So these gaps that we've seen from the past, we don't see them anymore. We come out first, we may set our prices in category by category, region by region. But eventually, when some competitor doesn't follow us, we have enough agility to position our price in the correct price, remembering that this quarter, the market has fallen all over the world. And so in our case, it's a large part of that price has come from that. Fabio perhaps can mention that a little more. Direct distribution has a lot to do with the big volumes, the big trades, lots to the cash and carry market. And it aims basically at the southeast, where you have a higher level of efficiency and better margins for serving. I don't have a dimension to give you. Perhaps in the next quarter, we can give a little more perspective about how much that will mean to us over time. This is Fabio. You can comment Gustavo's comment here. In the next quarter, we'll bring a little more granularity about that question. The question of the direct distribution. What happens is, it's happening countrywide in terms of potential, especially in the cash and carry channel, is the question of greater use of our own trucks, our own fleet, which is more concentrated in the Northeast. Remembering that the Northeast 60% of our sales are delivered by our own trucks. In terms of magnitude of these movements, if we look at the line of freight in the second quarter, this is what's in our financial statements. We'll see that there was a reduction of 3.8% per kilo, as I mentioned in the previous question. In nominal terms, something close to 21 million reais in reduced expenses in that area. However, in the next call, we'll bring more granularity on that question. Thank you. Our next question comes from Henrique Bustolin from Bradesco BBI. Good morning, Gustavo, Fabio. Thank you for taking our questions. I also have two. First, for the question of volume. This year, you have a base of comparison. The question of the torcida, we have a difficulty with this recovery. What I wanted to ask is if you could qualify, when you look at the commercial performance over 2025 in the third quarter, how you look at this performance in volume, gaining that traction, and what are the principal indicators that give you confidence that this recovery will be happening in a more structural way, and what you should think about looking forward? That's the first question. And the second is about the gross margin. Thinking in the annual comparison where we see some compression, but the impression is that the cost of commodities, the unit costs was better in the first quarter than in the second quarter than in the first quarter. If that makes sense, and if the cost benefit is clear during the second semester, second half, looking at the price increases is not something that you should be doing more of this year. How comfortable are you with the level of prices that you currently have to think about recovering your gross margins of 35, 36%, which is perhaps what's necessary for the EBITDA margins to go back to the mid-teens? This would be a discussion of volume coming back, or do you have some target of prices to get there? That would be my question. Let me start, Henrique, and then Fabio can add on. Starting off with our gross margins. Yes, we have pressure on costs, even with the stabilization of wheat prices. When you look at wheat compared to the price of the dollar, it winds up being more expensive than the unit cost in the past. The exchange rate, especially at the beginning of the year when it was close to 6.20, impacted greatly our costs. It should have an improvement now in terms of cost, especially in margin, not just by the cost, but also due to the increase in volumes and fixed costs. If nothing happens, the third quarter and the fourth quarter are better quarters than the first and second quarters of the year. Historically, this is our trajectory. In our case, we see that the actions underway are already having an effect. As I mentioned, we expected to see something different in the third and fourth quarter. How we already see something happening in May and June with these changes in our mindset. When we look at volumes, we're looking at negotiations which are much less based on negotiations with trade, and much more looking at the trade we're looking more at sellout. We can look at sellout so that the sales come together with the consumer. We don't want any retailer to be stocked a certain maize and not buy in the following month, just at a moment when we have financial costs with the Selic at 15%. We are doing plans, quarterly plans with the traders, so that the goals of these plans are combined ahead of time and can be reached in accordance with our sellout. This is changing very quicker, even sincerely faster than we thought. The receptivity on the part of the traders for this type of plan has been very well received. It's had a good reception. So looking ahead, I see growth in volume by itself, which is due to the seasonal question. Growth in volume due to the improvement in the processes, focused on sellout, more control from the point of sale, and clients that are much more involved, and obviously better margins due to the things we mentioned, lower costs for the next quarters. Hi, Hiki, this is Fabio. I just wanted to add to what Gustavo mentioned, that your question that gives us confidence that we can maintain the same level, same traction. What we've seen in recent months is the consistency. We see consistency in the volumes, sell-in volumes with consistency with the sell-out, pushing the sell-in. And this all leaves the operation much more fluid and much more predictable, both from the commercial standpoint as well as the operational standpoint, the manufacturing and distribution, which has been very favorable for the profitability in the quarter. This consistency that we've seen over recent months gives us the confidence that we can maintain the same level of volumes. Very good. Thank you very much. Our next question comes from Thiago Duarte from BTG Pactual. Thiago, please go ahead. Hi, good morning. Good morning, Fabio, Gustavo. It's good to talk to you. Two questions from our side here. First, I wanted to ask for if we have access to some information that you used to open up in the past, both with respect to the channels as well as the geographies. I wanted to understand if these elements had, in your vision, any impact, more significant impact in that which we're seeing for the average prices in this quarter. And in relation to that, you also mentioned that there was a positive effect of mix, which I imagine is the products from the, for example, in cookies in relation to other categories. I know that you don't operate, if you don't open this information, if you can qualify a little bit beyond the mix, any effect of channel and geography, which could have impacted the evolution of the average prices in the first quarter, in the quarter. Also, I'd like to make reference to what Gustavo mentioned at the beginning of the presentation. He spoke about strengthening your commercial capacities and highlighting both in the presentation as well as in some of the answers that there has been a more sales of direct distribution, the increase in participation in your own in-house fleet, and more concentrated on the trade marketing, perhaps at the cost of sales of marketing for you guys. Using these three examples that I just mentioned, and certainly there will be others, when we look at these initiatives, several of them are heading in the direction of almost the opposite of that which the company was proposing to do during a certain time over recent years. For example, when you start to use more third-party logistics and intensify your spending on marketing, I wanted to see how you're taking advantage of these changes in this feeling that this quarter has brought. You commented a great deal. I wanted to understand a little bit about how do you understand the positive impacts, either through terms, what do you understand about these commissions, this correction, and route correction brings to the company differently from that which we've seen in recent years? Taking advantage to give when we talk about market share, which is a line which was not so great in recent years, but if you could exploit that a little bit more for us. Thank you. Let me start with the last question, then Fabio will help. Thank you for your question. It's great. Your question is very interesting. I wouldn't call it a correction or course correction, but there are different moments in time. In the past, I would say that in 2019, we had a process of scaling up the Piraquê brand, which was very concentrated in Rio de Janeiro in Espírito Santo, and not well known in the rest of the country. So naturally, you had to do a branding work, which was more investment in recent years. So it wasn't. Was it necessary? I think it was. Yes. I think the results are there. We more than doubled our sales for the Piraquê brand. It is exposed now in virtually all of Brazil. So there was some important branding work to reach that level. This branding work was also very important for these moments of necessity of bigger pricing. Looking at the pandemic and everything, our costs practically doubled. And the less strength of a brand you have, the more difficulty you have in pricing. So I would say that in the previous moments, this type of things needed to be done. Perhaps with a little bit less intensity, or a little bit more. I don't know. I don't think anybody has the actual answer to this. If it's good if there was a mathematical model, but there isn't one. So we've made various attempts to extract, but we haven't been able to find this formula. However, conceptually, we're in that moment. At that moment, it made sense. What we see now is a movement much more to head towards this level of pricing, which was very important in the past due to the inflationary costs. Otherwise, our margin would be instead of 5%, if we had capacity for pricing, it would be 13%, 14%. We'd have a much lower level of pricing power. It's different than what we see at the current moment. However, now with the stability of the brands, and as Fabio showed that research of recall, the brands most present in Brazilian homes, not because we're going to not invest in branding, but it is a moment to reduce a little bit and increase in an area in which we have not been prioritizing branding in the past. This is a little bit of the dynamic, since these increases in prices have brought us to a loss of market share. Market share, I always said, much below the price would be very disturbing for M. Dias. So we're looking at the commercial execution, commercial routines, quarterly results, certain KPIs, specific KPIs, the daily meetings of the sales teams with the managers. And so it's this, which is underway. It began this year, and which will show its effects in its execution. It's a big job for execution. So I think beyond that, we need to improve the investments to improve this execution. I need to get my product on the shelf. And another thing is to incentivize the client to pick out our product. How do I do that? By having more sampling in the stores, more in extra sales points, sales promotions, investing with the retailers. This has been a little bit of what's on our mind. To be able to do that, the recovery of market share that you mentioned. So that's a little bit the logic that we're using. For sales, direct sales, it's not a relevant change. We're seeing a few opportunities for sales. Direct sales, we have lots more industrial plants in the Northeast than in the Southeast. So certain products we're not able to attend in the Southeast. To arrive with the more direct sales I'm able to do with these high volume items, the better. So it's much more in that sense. I don't see it as a transformational operation. For me, the efficiency is in the routines, in the daily sales, better controls, better collections, better involvement with the support of the trade marketing teams and the point of sale. We have this change in service to viewer via direct sales. Did you want to mention anything, Gustavo, about these channels? Yes, Thiago, in relation to, I think you must be asking about average prices. Looking at what we've seen in the evolution from the first quarter to the second quarter, there was no big impact of mix between the channels or even between the regions or geographies. The principal differential that permitted an improvement in the mix and a favorable impact on the average price is more of a growth in the category of cookies, where we have almost half of our revenue, and where we have average prices above 10 reais per kilo in terms of net revenue. So the recovery of growth is cookies is fundamentally important for the improvement of our average price without considering any type of pass-through for the price. When we look at the question of mix and of regional channels and levels of margins, talking more about the margin and the bottom line, there's a series of initiatives that were done to improve our efficiency in those regions where we to be able to continue to present favorable results, favorable for our EBITDA margin for the rest of the semester, the rest of the second half of the year. Thank you very much. Our next question comes from Lucas Ferreira from JP Morgan. Lucas, please go ahead. Hi. Good afternoon. My question is about cash generation. Was very strong in this quarter, but as I see, there must have been some gain in the line of inventories because prices have continued to fall of the principal raw materials. This might be on the part of clients or suppliers, but the expectation is that the EBITDA, with an improvement in the level of inventory, you have a very comfortable position in cash. So my question is, how do you evaluate that? Should we expect a bigger distribution? Eventually, a capex, some new things will come into the plans. And my other question is just to clarify, looking at the graphs which you showed up of raw materials, the numbers of it looks like there's more price. We have palm oil falling with wheat prices falling year to date in dollars, and the real 15% stronger year to date. And so if at the point of sale, if you're seeing the results of these reductions in cost. Lucas, this is Gustavo. I'm going to start here and then Fabi can jump in afterwards. As I mentioned previously, there is nothing changes. There is a price improvement already contracted. We see the exchange rates improving, palm oil and wheat prices helping us. However, this freeing up of working capital has two effects. It has to do with volume as well, the volume of stocks. Compared to the previous, we have more stock of wheat. Now it's stable. And these stocks are smaller. The inventories are smaller. So it's not just a question of costs, which is from the standpoint of costs, yes, there will be some from the volume of trigo, of wheat. I think that the current stocks are okay due to the other stocks and finished products. So we have a much better control of that. The stocks, we can see better costs going forward. look at the current deliberation of stocks. These volumes are at adequate levels. We're looking at the capex. We don't see any big changes coming. Perhaps for the next years, we'll have a project of modernization. We're doing a study of that. The first discussions with the council in Sao Paulo on Friday. So we have certain things that we're going to need to do to improve our operational costs, our cost of production. It's not going to hit us this year. We have the capex normalized without the effect that we saw last year of the SAP, the switch over to the SAP system, which generated that cost last year. Thank you very much. Our next question is from Gustavo Troiano from Itaú BBA. Gustavo, please. Fabio, Gustavo, thank you for your taking our questions. I wanted to ask about a little bit more is this comparison of the top line with the Nielsen data, which you reported, what shows the performance of selling of the company has performed above the Nielsen numbers. My doubt is to know if this difference is due to a difference of the sell-in with the sell-out in the quarter, to try a little bit, understand a little bit better if the sell-in grew ahead of the sell-out, if we may see a movement of increased inventories for the retailers, or what was the performance of the sell-in based on what the Nielsen numbers are? Is it something more geographical or more geographical mix from your point of view? I wanted to understand a little bit more about the level of inventories in the retailers. We've seen this with other companies, other consumer companies, with the high cost of capital. This is a higher discussion that has more frequently appeared. So I wanted to understand a little bit more your perception of this dynamic of how is the level of stock with the retailers due to this question of the comparison of sell-in and sell-out that we saw. Thank you. Hi, Gustavo. Fabio here. Yes. Thank you for the question. The first point that what we monitor in our inventories of the MGS items in our clients, no big change, no change up or down. We have been able to have visibility both in the retail clients and also a reading in the distributors. So we don't see any overstocking in our clients. I think your reading is correct. The sell-in comes in before the sell-out when we look at the numbers for the quarter, and some reading of the very short term of sell-out, which have already started to point to a recovery of share. Okay, great. Thank you very much. The question and answer session is now closed. I'd like to pass the microphone over to Gustavo for his final comments. I want to thank you all very much for participating with us in this earnings call and reinforce our availability to speak with you, take any doubts or questions you might have. We're very confident in the future, certain that we're starting to pick up the results that we imagine will be consistent with our strategic planning. So once again, thank you all very much. The video conference of M. Dias Branco is now done. We thank you all for your participation and have a good afternoon.